bad news. So whilst the US has started to import more again, most of its new imports in the recent months has come from more imports of oil, that's all. It's not sucking in new fresh imports of manufactured goods. So I would say this is therefore bad news for merchandise goods exporters in Asia, right? So that's a bit of a revelation. Yes, the US is supplying liquidity to the rest of the world again, but it's not coming to the exporting countries in Asia. It's going to the oil-producing countries. The second thing I looked at, of course, is the carry trade. This is plainly money flowing out from the US in search of the yield differential. If you can earn a higher return from another currency other than the US currency, of course the US dollar pays almost zero in interest rates. If you can earn it from some other currencies, you would transfer it out. And especially this would go on for as long as the US dollar keeps weakening, and the US dollar is weakening. This is the dollar index. Oh, my apologies, part of the word has disappeared. This is the dollar index in brown. It keeps falling, you can see. We have had a bit of a rebound recently in the last couple of weeks. But you can see that, in my opinion, the main determinant of the longer-term outlook for the US dollar is the proportion of international reserves that are held in the US dollars. And you can see that the trend continues to fall, and the fall is accelerating. So that the longer-term outlook for the US dollar continues to be one of weakening. In the short term, it might do a bit of a rebound, and this rebound is in fact resulting in an anomaly in the stock market. Now, normally when you look at the carry trade, you can say that the carry trade drives, at least partially, drives stock markets. It's providing liquidity to stock markets worldwide. You can see how this effect of provision of liquidity affects the CI as well. Notice the areas circled here. The changes in the dollar index moves almost exactly in sync with the movements in the KLCI, almost point for point sometimes. But this correlation seems to have broken down recently in the last month and a half. The dollar strengthened, the stock market didn't weaken very much. By the way, this is an inverted scale for the dollar index. When the dollar weakens, the dollar index is rising in this format. So you can see that the dollar index actually strengthened, but the stock market didn't go down along with the strengthening. So this correlation is, at least for a while, seems to have broken down. Okay, but I don't think it's invalidated the longer term correlation between a weak dollar and strong markets worldwide. The dollar continues to weaken, therefore the outlook for the carry trade is that it will continue to strengthen stock markets worldwide. Okay, we've looked at, just very quickly, the sources of international funds flows, and the picture seems to be continued funding of US dollars, of liquidity worldwide. But let's look at what it looks like from a domestic perspective. Funds flow domestically, just for Malaysia. Funds flows in Malaysia are determined by, number one, foreign inflows. Okay, we know dollars flowing out worldwide, but are they flowing into Malaysia? Well, the picture is, yes, a little bit of the spillover is coming to Malaysia, a little bit, not very much. This is the quarterly funds flow into Malaysia from Bank Negara. You can see that there's been a rebound, but it's not spiking up to levels that we saw in 2006, 2007, not anymore. It remains at levels quite low, and roughly corresponding to levels in 2004, 2005 and maybe early 2006. So we can that means that the strength in the stock market we see currently isn't from foreign funds, it's from local buying. People like yourselves, everyone's back into the stock market, but it's not the foreign funds, okay? What about local retail investors? Well, retail investors flow, you can see it from the Bursa Malaysia statistics. It's the balance, is whatever is not the foreign funds flow. Well, this is a picture with the foreign funds shareholdings in Bursa Malaysia. You can see that it's leveled off, but it's not really rising. After a small rise, maybe in the second quarter of this year, it's been holding steady. So no real net foreign funds inflows, no big inflows anyway. Retail investors, we've had flows in and out at various times. They could be strong, they could weaken at some points. In the last month, we've had strong inflows from retail investors. Everyone knows that. So that's primarily the source of funding from the foreign side. Nothing is much going on. And the impact on the impact on stock market, whilst foreign flows are not very strong, the impact on the property market also shows up. There's been quite a robust rise in property prices in Malaysia over the last maybe 3-4 years. You can see the average annual gain ranges between 3 to 8% for most segments of the property market. But in the last year, you can see the growth has tapered down to almost zero. So much of this liquidity that I talked about, both international and locally, hasn't been flowing into the property market. That's evident from movements in prices. So we had fairly strong stock markets, a rebound here from a small rebound in foreign funds inflows. No effect on the property market. Okay, so I've looked very briefly at foreign funds inflows through the capital account and the investment account. Let's look at the trade account in Malaysia. The inflow of funds from Malaysia's net exports has been kind of stagnant. You can see the trade surplus here, which is a major manifestation. It shows up in the trade surplus. It's not rising very much. We can see in 2007, 2006, 2007, we have a nice spike in the trade surplus. It's fallen back to somewhat lower levels, consistent with levels in 2005 or so, but it's just holding there at the moment, not improving very much. Our trade picture is not great. You can see exports were trying to recover and then fell back in November. Malaysia's export figures are bright only in respect of exports to China. Now here's a plot of our exports to China. Malaysia is a big beneficiary of the attempts by China to keep its growth afloat. You can see here a plot of Malaysia's exports to China, just to China alone, not to the rest of the world. The previous chart, we look at exports to the rest of the world. You can see that on a net basis, Malaysia's export growth is about zero at the moment, standing about zero. What does it look like for the exports to China? It's gone to new highs, new records. The previous peak that we saw before the recession was in September 2008. Now it's gone on to new highs in November. Now the November numbers are not available yet from Bank Negara, from our statistics department.